Hey folks, welcome to the second part of this market update from Charting Star. I'm Joe. It's about the Dow Jones, the S&P 500 and the Nasdaq. And what you see here is historical data of the AA retail sentiment. And I was talking about that the first time at mid-June when we made that low in the US markets. And you see what I was mentioning, that we have that very, very bearish side, which almost hit 60%, and the bull side just went below that 20% area. And I said it's very unlikely that we continue dropping. It rather looks like that we are moving up to clear off that sentiment. We need to equalize somehow, and we had a similar reading, and I was giving you that example here from April 27, and I said it needs to equalize. It needs to look like something like this here, that they are all back in the 30s. And have a look where we are right now. The bull side went above 30. The neutral side is in the 30s, and the bearish side is still a bit higher, but 36 is actually a totally healthy environment we are in right now. And so that means all these retailers, we made actually the low here in the markets, and now we run up like 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. That means these bears or these retail shorts, they're all trapped down there, or they just had to cover their positions. And that actually made that rally to accelerate. And yesterday another funny thing happened. The CPI data came out, the inflation data, and it was a little lower than expected at 8.5%. But the funny thing is that we had exactly the same reading in March with 8.5, and the markets, they panicked. Also, of course, with the situation in the Ukraine. But we have the same highest value of inflation. I mean, last month it was 9.1, I believe. Now it's 8.5. It's still high. And the markets are just celebrating that party right now, which shouldn't really last that long. And I can give you another reason if you have a look at that smart money flow index. And even if it's just a little drop from down here, you can see that smart money actually started to pull out their positions while the markets kept rallying. So how does it work? Usually what happens is in these rallies, and you also can see that volume is constantly decreasing. That the big market movers are taking their positions out, and the retail side actually switches, what we also see on the sentiment. And this is actually accelerating that situation, or that rally, that the retailers start to flip over. They cover their short positions, go in long, and try to participate in that rally. And the big guys are just already selling into that rally and just preparing for that next drop, in my opinion. It happened many times before. I still believe it will happen this time. And let's hop into these charts I'm going to have for you. So let's start off with the Dow Jones. You see here, I was showing that in blue here, that dotted line, that triangle, and I said that first thing looks like a fake, and then usually it pulls back and it is testing the other side. And it turned out to be, and not to be the real faker, it actually turned out to be the real move. This morning we hit the 100% target of that triangle. These are like futures, by the way, on the 4-hour time frame. And I was also showing that bearish Wolver wave wedge, which got created with that ridiculous rally from yesterday. It was the third touch of that upper trend line, and we have also like a negative divergence on the 4-hour time frame. That's why I'm showing this here on the 4. It looks actually much clearer on the H1, but we don't have on the 1-hour time frame that negative RSI divergence. And these target lines, they run in that 30 to 600 area, or 650, 30 to 650. So yeah, it might squeeze out even more here. We hit, by the way, my last target of that move up at 33,432. That was a 161.8 extension of the Dow. So we are getting close on there's, oh, actually, there's another target I got for you. That bullish Wolver wave wedge I was showing over the last few weeks. That target line runs still at, yeah, let's say 33,670. And yeah, that future high we made here on the 30th of May, we got rejected there this morning. So yeah, have that, what was it, 477, have that, have an eye on that as well. This morning we almost reached it and we got rejected a little bit, but yeah, that isn't enough so far. And once we have a look into our daily cycle chart based on the cash market, it looks very similar to the one I was showing in the other video from DAX. It suggests actually a low today, and you have to give it some time all the way up to the 22nd as well. It still could work out because the Dow Jones is already in week 8 of a so-called half primary cycle, and usually they find a trough excuse me, within week 8 all the way up to week 11. So there might be a bit more sharp decline into the next few days if the rally finds an end in the next few days. So that's about the Dow Jones. So let's check the S&P 500, the 4-hour time frame based on the cash market, and what you see here is that bullish Wolver wave wedge in blue, and it almost hit that green target line I'm showing for weeks. It's running presently at 42.13. So we might hit that today. If I look at the futures, we are already above that target line. So that thing could have worked out now. And that's my last very strong resistance zone here, that blue box. It's between 42.03 and 42.55. And once you have a look at these cycles, I'm going to zoom in here a little bit. This pullback, this little tiny pullback we had here, it seemed to be that we had a very shallow pullback for that subcycle here. And it turns out to be that this whole cycle is much stronger than I thought. It actually jumped on that upper trend line of that wedge. We're going to have a look at that in the next chart. And yeah, this chart here also suggests a low around the 18th. It may extend all the way up to the 24th or 25th of August. So I'm pretty sure that we still are looking for a top here somewhere in that area, and that the market might turn in sharply the next few days. And I was giving you that bearish Wolver wave wedge a few days ago on Twitter, and I said it looks like perfectly, and we hit that upper channel here very precisely. We retested that upper trend line like 1, 2, 3, 4, almost 5 times perfectly, and then we made a very nice back test, and then that CPA data came, and yeah, we just gapped up and we stayed up there all day long. A lot of people use that crossing of these two lines as an apex, so it's the expiration date of that pattern. I would rather leave that pattern in the chart because there's still that negative RSI divergence which is still valid, and there's also that time frame for that cycle low, and that gives me enough reason to keep that wedge in here, and it's still possible in my point of view that we hit that 3900 area in the next 1 or 2 weeks at the S&P 500. And I also have another weekly for you. I was asking at Twitter what moving averages are important on the weekly time frame, and I was already twittering that Nasdaq solution or that Nasdaq answer. And on the S&P, it varies between the MA25 and the MA30. I gave you the MA30 here now as well. You see it found very nice support here on that pullback in October last year, and since we broke through it, the S&P couldn't really get over that MA since then. And I put the 30 MA now in here because it's also meet that very strong resistance out of the weekly, we have to say. So if we get a weekly close above here, that's actually a good sign for the bulls. But once you have a look on that RSI reading, the last time it hit that 50 area or that 53 area, the market turned around very aggressively. So just keep that in mind. And that what happens actually a lot in these bear market rallies. And we're going to have a closer look on the Nasdaq for that. And we're going to flip over to that now. And we are going to start off, let me just check. I'm going to show you that MA30 here as well, because the Nasdaq has so many more touches than the S&P. So this one here is a weekly chart based on the cash market, and you see one confirmation, a second one, the third, fourth, fifth. Then we broke through, and we retested that 30 MA from underneath, and then we just kept selling, and there was another retest. And I was saying the other day we need to have a weekly close above it to take that breakout serious. That might happen, but I put, by the way, these weekly gaps in here, which are also important for the Nasdaq. It's 14,327, and there's one up here actually still at 15,611, and one down here at 11,265. Don't forget, I still have 2 open targets, which are actually below that low here. At Nasdaq, it's still there in my trading system. So I still believe we are just running up in a crazy bear market. And I know there are a lot of people out there. Nasdaq went already over 20% up from its low, and we are in a bull market. By definition, it's a bull market if we overtake these 20%. But we're going to flip over now into another weekly chart, and we're going back into the dot-com bubble crash in 2000. That's a high here. And I just wanted to show you that these bear market rallies, they can go much higher, even over 50%. I'll just give you a few examples what happened here. This rally here was over 24%. This rally here was over 41%. This one here was over 24%. This one here was over 32%. This one here even got up to 53%. And this one here as well, we almost hit 60%, and we made new lows after that. And the same in the financial crisis. They weren't that intense, but we also had like a rally which hit 23% at the top, or here another 20%. So just keep that in mind, that the craziest rallies actually occur in bear markets. And we're going to stay on the higher time frames. That's a daily chart. And I put in here the SMA 150 because it's the same as the 30 MA on the weekly. And you can see it is actually not even that resistance we have. There's also that trend line coming from the top. and it's a so-called descending broadening wedge. And usually once we hit that upper trend line with the third touch, there's a pullback. And I was showing that on Twitter the other day. We pulled back already like 400 points from here, so that could have given you a nice profit already if you were trading that short. But in my point of view, it's not enough. There might be another pullback, which is even bigger. And I was actually telling you that as well, that you should expect at least 500 points to the downside. And I don't think this thing here is enough for a proper pullback. And there's also a cycle here coming to top out. And most likely we're going to see something between 12,000 and 12,500 very soon. And on the smaller time frame, the 1 hour time frame, we also have the same bearish Wither wave wedge, the same what we have at the S&P. This one is just much shallower and flatter, and it got the same RSI divergence. We actually got much more RSI divergence on the H1 cash market. And there is also another bearish wedge which added into that pattern. And as you can see, what happened yesterday, we gapped up and we were just moving around that upper trend line the entire day. And right now the futures are up again. I still have a very important open target here on the cash market at 13,434. So if we hit that, there might be a possibility that here somewhere in that green area is our top. And I think we have another one. No, we're going to hop into volatility, the VXN. And what you see here are a triple bullish Wither wave wedges. You see a big one here in red, another sharper blue one, and there's that new purple one I have. And you actually can draw a line here as well. So that gives us like the target line for this one here, for the purple one. So it's like a triple wedge, and I can tell you one thing: once you think fire, it will happen fast. Once volatility is picking up, and there must be a trigger in the market. There's another data coming out today. It might be Taiwan. With that trouble they have with China. There will be something soon. That's my belief. So that's about it. For my market update. I hope you like this one, so give me a thumb up or subscribe this channel. I wish you still all the best and good luck, and don't forget safety first when you trade. Have a good one.